I guess many of us as investors, and I'm an investor in the market like many people on the call, we have a look and see what's this post-COVID stimulus all about. And if we think about 2008, when we had the financial crisis, there was a stimulation of the economy into the legacy industries. Well, this time it's different. Many commentators have added up how much governments are pumping into stimulate the global economy. And what's different about it this time is it's almost exclusively going into things that are green. There's no better example of that in Germany. Germany's announced $130 billion worth of stimulus, and Angela Merkel's not putting a single euro into her biggest industry. She's not putting a single euro into the internal combustion-based car industry. She's putting it all into EVs, batteries, and announced 70,000 charging stations and a 6,000 euros subsidy for cars. But probably even bigger than that is one that it's almost gone unnoticed, is this phenomenon that's happening predominantly in the North Sea. But basically, we're looking at a $1 trillion industry in the making. Just quietly, the government policymakers have worked out that onshore wind and solar is difficult for technical reasons. Also, they're not very efficient. Also, they're difficult to get approved. But suddenly, they found these places offshore where they can inject huge amounts of money. And just in the European Green Deal alone, there's 25 billion going to be invested in the next 2 years. And the manifestation of it is this thing I never knew it existed. It's the North Sea Wind Power Hub. And it's huge. This thing is the biggest energy installation on the planet. It's 6 times bigger than China's Three Gorges Dam. And to sort of understand it, is those of you familiar with that part of the world, there's these sandbanks. Dogger Bank is the most famous one. And they're basically putting an array of absolutely gigantic wind turbines. The ones that are installing at the moment are the GE Haliades X. These are 12 megawatt turbines. They're 260 meters high, just absolutely massive. And it's over 1,000 square kilometers. And what's phenomenal about these is both the EVs and the offshore wind, they work because of permanent magnets. Permanent magnets are these tiny little magnets that you may be familiar with. They're incredibly powerful. They'll lift nearly 50 times their own weight. They're durable, heat resistant, and moldable. And you think about an EV, what makes an EV exciting? Well, it's not really the big 3/4 of a ton of lithium-ion battery. That's a bit of old tech, a bit of old kit, really. What's exciting is these tiny little axial motors that have got these incredible power-to-weight ratios. That's what makes the Porsche Taycan do 0 to 100 kilometers an hour in about 2.5 seconds. They're almost Formula One car speeds, but it's because of this power-to-weight ratio. But you think about what a wind turbine is. Some of the onshore wind turbines are actually induction motors, but they have an induction motor and a gearbox. What makes offshore wind turbines really exciting is they're just simply a single drive. The rotor is the copper cables, the copper coil, and that rotates inside a very, very large permanent magnet. And these things weigh about 7 tons. So you've got 7 tons of permanent magnets in each of these massive wind turbines, and they're going to get bigger, much bigger. We think 260 meters high is bigger, but that's only for 12 megawatts. They've already got on the drawing boards 20 megawatts and 30 megawatts per turbine. So this is definitely a massive growth area, and the numbers in terms of the demand for magnet metals is basically the advisory firms, the research firms are coming out and issue warnings saying basically demand for these metals is going to be enormous over the next 5 years, and there could well be shortages. And it's even more critical when you think about it that 87%, nearly 90% of the world's magnet metal production currently comes from China. And so if you buy an electric vehicle, and they're full of magnets, not just the axle motors, I think it's like 47 magnets in an electric vehicle, all of those magnets are almost certainly made in China. And we are, when we look at around the world who supplies the feedstock for those magnets, these are the mines that produce them, the ore that gets processed into carbonates that get sent to China to turn into magnets. There really is only one large mine, and one mine of any size currently outside China. That's a company called Lynas Corporation in Australia. It produces about 7% of the world's production. Well, we're now trying to be the next Lynas. We're trying to be that next supplier. We've got a very large deposit in Angola, in West Africa, and we think we can, because the one advantage that we've got, which I think as a mining engineer and mine developer is incredibly significant, we've got amazing world-class infrastructure. The Chinese have put $20 billion into Angola. They've upgraded the Benguela railway line, upgraded the port, and we've also got some fantastic hydroelectricity on tap. So basically, there's the three big things that you need for any mine. You need access to a port, you need a railway line, and you need cheap green power. Well, this mine actually comes with all that in place. And literally, as you can see, the railway line is quite literally brand new. The port is, we've put some containers through that port. It all works extremely well. And then we, sort of by reverse engineering, we happen to have a world-class ore body, one of the world's largest rare earth deposits, sitting right next door to this railway line. And without going through all the geology of it, it's a weathered carbonatite. So that means the top bit, that weathered zone, that dark grey zone, that's the ore zone. So it's basically a blanket of mineralization. Happens to be weathered, so it's broken down, and it's actually quite high grade. So it's some relatively high grade. It's over 1.5 kilometers, and basically we just mine it off the surface and process it. And then we just released some drill results that go down into this fresh primary zone and underlying it, and that's all mineralized. We've got intersections going 80 meters from surface, all mineralized, as you see in that diagram. So very, very exciting. It's getting very, very good grade. And then the process route is relatively straightforward. We're doing a relatively straightforward process. We're going to mine the ore, float a concentrate, and then we're going to turn that concentrate in what's called a carbonate, a mixed rare earth carbonate, and we produce around 16,000 tons a year, and that goes to China, Japan, Korea, and Germany. So it's a very well-established product. There are established markets for it. Unusually for a junior mining company, the three big things for a junior mining company is what do the economics look like? And every junior mining company will tell you they've got a mine that's in the lowest quartile and it's got very high net present value. So the next two questions really are sort of what's your capital cost and how you're going to fund it, and then have you got approval? Well, we're coming to you and saying we've already got presidential approval. Not only have we got presidential approval for the mining license, we've actually got the Angolan Sovereign Wealth Fund has been funding us. They now owns 18% of the company and want to put more in. And this week we've just announced a heads of agreement with a major Chinese state-owned company, China Great Wall Industry Corporation, and they're going to provide the EPC, that's the engineering, procurement, construction, and finance for the funding development of the $200 million mine. So we're coming to market, coming to London with these elements in place, where normally you'd expect a junior mine to spend a couple of years putting these things in place. I won't go through all the details of the agreement with China Great Wall, but we're basically tapping into a very well-established contractor in Angola. China Great Wall's been there for many years. They basically have been one of the main contractors for that $20 billion investing in Angola. So they're very well developed there, and they tap into the commercial banks in China, people like banks like Bank of China, and they bring with it credit insurance. So in the same ways that we might go to UK Export Finance, they bring along Sinosure, which is the same kind of thing. It gives sort of sovereign risk guarantee to development of the project. And just one other feature of it, the tenor of these loans was 8 to 10 years. That's exceptional. It's very, very difficult to get that kind of tenor from a conventional mine financier. So very attractive. So basically, in summary, we've got a mine. It's very, very low capital cost. It's around $200 million. We've got an EPCF with a Chinese SOE. And we've got a bankable feasibility study coming out in the middle of October, which will be able to populate those numbers in terms of the sales price, the EBITDA margin, and the value of the company, the value of the asset, and hence the company. I think the simplest thing to say at this point is rare earth prices are at a very low point. When rare earth prices run, they run very, very, very hard. We work closely with Roskilde. They're very closely monitoring this situation, and their view is the view on the low price is that it'll be well above what it is now, and then the medium and higher, obviously, significantly higher. So we're coming into this where the mine looks like it's economic today, but the forecasts are for very strongly rising underlying metal prices. And then just in comparison, we really don't like comparisons with other companies. We think all these other companies on this slide are very good companies. They've got very good management teams with great projects. But if we can just draw attention to two things. There is only one major operating mine in the world, a listed company, that's Lynas Corporation in Australia, has a market cap of about $1 billion US. All the fledgling producers, that's ourselves, Peak Resources, Arafura, Hastings, and Greenland, are all going to produce about roughly the same range of NdPr oxide. So it's all in that range of 3,000 to 5,000 or 6,000 tons of NdPr. So there's not a huge amount of difference between them. But we would just point out the significant difference is our capital cost is significantly lower than the others, and that's a major part of that is because of the infrastructure that I pointed out at the beginning. And we are permitted, we have our mining license, and we've got a clear pathway to our finance in place. So we would suggest that makes us a little bit ahead of the pack of the others. But irrespective of that, the demand for these metals we're probably going to need all those mines anyway. We just think we're probably ahead of the pack at this stage. We've come to London in part. We've recently listed on the main board, the LSE, is we really do feel we've looked very, very hard at this EU taxonomy on a sustainable investment. This isn't something that's just for ESG funds. This is going to be a bit like MiFID II. All funds are going to have to subscribe to this. And so all companies, and I think we all do this in our daily lives anyway, we have to basically declare what we're doing that makes us sustainable. And in our case, in mining companies have to state what they're doing in terms of greenhouse gas emissions, because the industry is quite significant in that regard. And there's this thing of scope 1, scope 2, scope 3. Scope 1 is basically how you operate your mine. Do you use diesel trucks? Where do you get your power from? Well, we've got hydropower, so that's green. Scope 2 is what your suppliers bring to you, and we've got railway lines and things, so our scope 2 emissions are very low. But what makes us significantly different from Rio Tinto and BHP is our scope 3. We're scope 3 compliant. That means our customers take our product and use it for sustainable purposes. So we know that our magnets will go into electric vehicles, and we know that they'll go into offshore wind turbines. That makes us scope 3 compliant, which makes us very attractive to these ESG funds. And as I mentioned, all funds now want very high ESG standards. It's not just the ESG funds themselves. Increasingly, Fidelity joined our register not so long ago, and they asked us for an ESG report. And basically, every single institutional investor coming into companies such as ours have got to demonstrate that their investments are sustainable. So we're well ahead of the game in that. It's not just being environmentally sound. It's all about what you're doing with the community. It's all about what you're doing with your local governance. And our particular area is Angola is a fabulous country. It's come out this horrific 20 years of civil war. It's now had a democratically elected government that's full of Gen X, smart, very, very well-educated politicians. And they've got voting them in. The average age in Angola is about 17 years old. It's a very, very young population, very bright, very well educated, very aspirational. So one of the areas we're working on is taking young women and putting them through STEM to bring them on as young professionals into this, as the government diversifies away from oil and gas and diamonds to tourism, agriculture and mining. We're the flagship mining project. We want to bring young, bright Angolans into that environment and allow them to bring their scientific and engineering skills along with them. So that's very exciting for us. We've got a strong board and a management team. These are guys who've done it before. We're very much building our Africa focus. We've closed the office in Perth in Western Australia. Tim George, Rob Kaplan are both based in Africa. In Africa, Dave Hammond is based in Australia, but he previously worked for Peak Resources. And the board has got a seriously good track record of making huge amounts of money out of junior companies like this, particularly Neil and Mark. They took Extract Resources, Kalahari from a junior to, I think they sold it for close to $1 billion. So this is our business, getting hold of a junior company and turning it into something that's got many multiples of upside. And as I mentioned, this unusual relationship, juniors don't normally attract institutional investors until they're sort of close to production. Well, we've gone one better than that. Not only have we had Fidelity on the register, we've got the Angolan Sovereign Wealth Fund, a lot of high net worth. And we, again, usually for a junior, we've tightened up our register. We've got about 50 holders now who own 78% of the register. And the stock just gets tighter and tighter because more of those existing holders are increasing their position. Even in the board's been buying more stock. Angolan Sovereign Wealth Fund is increasing, high net worth is increasing. So it's a very, very exciting story. It's much more like a private company than one of these junior companies that throws shares around like confetti. We're going the other way. We're tightening things up, and we're seeing that in the share price. Share price has trebled since post-COVID, and we expect that to continue. We've got extraordinarily strong news flow over the next 6 months. I won't bore you with it, but basically as we move through the gears now to bring this mine through bankable feasibility, bring on the EPCM, the main contract, and aiming to be breaking ground in January and building this first major rare earth mine in over a decade next year. And there's a whole series of announcements related to that. Just as an aside, Angola hasn't been over 40 years of any sort of outside diamonds and oil and gas. It's had no sort of real systemic exploration. And we just picked up 7,500 square kilometer piece of ground with some phenomenal walk-up targets, including gold and copper and things. So we just think it's not just a question of getting in there and developing Longonja. We think we've got a great first mover position in Angola. And the geology there is phenomenal. It's very, very exciting. So we can't wait to get into that and share some news with shareholders. So I guess in summary then, and I hope I haven't kept you too long, Roland, but in summary then, there's $16 trillion going into this green energy wave. It's going to create this demand for critical metals. There are no new mines and constructions. The metal prices are expected to double or treble in the next 5 years. And we're a company that's got the presidential approval, financial backing, strong Chinese connections, and we're aiming to bring this mine into production, bring it online to meet the demand for these critical metals. Roland, I hope that was helpful.
Again, I might jump around a little bit, so apologies if I go from one area to another. Had a few questions about the percentage owned by the state of Angola. I think it was 18%, and you're saying that they're buying more. Are they buying more in the market, or if would you? What level would it be comfortable for them to get to?
I think a good question. No, they're not buying on market. We issued them stock. They've basically been funding. So they put the last two capital raisings have gone to the Angolan Sovereign Wealth Fund. We've issued stock. So they're now 18%. I can't predict what they go to, but obviously, there's a reasonable limit, and I would guess sort of 25%, 30% in that range would be the kind of maximum that you would want to have a government partner. But I'm not predicting. That's just a very general comment. I'm not trying to guide anybody in that regard. And no, they haven't bought on market. We issued them stock.
Understood. How did the asset come to you?
It was interesting, actually. I was brought over a period of time. I was also meeting nearly 400 opportunities to invest in, because I invest my own money in these things. And this one came along, and they were exploring for copper. And they were sitting right next door to this rare earth deposit. And I said, look, I'll do that one. I'll invest in that one. I want to do the rare earth. and they made no mention of the railway line or the hydro or the port, because they were really explorers. They're not really developers. We are much more mine developers. Our team are mine developers. So it came to us because the shares all blown out. There was 1.5 billion shares on issue. They had $250,000 in the bank. They were basically going broke. Everyone had given up, and we were given the opportunity to have a look at it, and we brought all the money in, invested our own money, and as you see, we backed the story to where it is now, and it's really moving ahead.
Coming on to China and the China Great Wall finance deal, does that also come with any obligations or commitments for supplying product? Do they get, or does China get any guarantees on the carbonate or any preferential access that come with that deal?
Really, really good question, and that's something that the board be very conscious of. We want to stay as independent for as long as we can. We don't want to bring on finance that ties our hands in terms of where and how we can sell our product. So, and that's why we made the point in the presentation that this is to China's commercial banks rather than a project financier or a PE firm or a particular large organization. So we regard the financing as arm's length. Remember, China Great Wall's mandate in Angola is to fulfill the government's policy of investing further in Angola. So they're not primarily in the business of rare earths. They're in the business of an engineering company that's investing. Part of its mandate is to do work in Angola. So in answer to your question, there are no ties, there are no limitations to it. Having said that, nearly 90% of the world's magnet manufacturers are in China. So it's going to be, China is going to be our main market.
And at what stage, if not already, do you start talking? Is it too soon to start talking to potential customers, or does that happen already?
No, really good question. No, it's just exactly the right time. So we've started talking to agents, and the board's agreed on the marketing strategy going forward. So we'll have boots on the ground when we can in China, meeting with customers. So that process has started, and will go on for, we'll be developing markets over the next 18 months.
Got a question here from someone who's identified himself as being ex-Anglo-American. I'll save his name for confidentiality, but he's asking, what plans do you have to develop mines at other locations?
Well, Anglo's been in Angola for a while. There are some, as the questioner would know, it's a phenomenal geology there. Much of it's undercover. So without giving away any corporate secrets, we're currently reviewing, quite apart from, in addition to the area we showed, the 7,500 square kilometre Kula exploration. We've just done a geological review of that, and it's, as we've flagged in the announcement, in the presentation, there's 10 targets on that, so we'll target that. But we're also looking elsewhere in Angola, but not for diamonds or oil or gas or any bulks. We're basically looking at what we call tech metals, that is anything to do with green technology going forward. So without getting any secrets away where we're looking, we are looking to develop more deposits, resources in Angola, and develop them, put them in production.